Hey traders, Raghee here, and in this free video we're going to talk about targets. Now targets are basically ending the loop, ending the open loop of an open trade. And if you get the targets wrong, look, targets are where we pay ourselves, and that's the reason we are trading, right? Our number one job is to pay ourselves. I know a lot of people talk about our number one job is to protect capital, but I think if you get the understanding of when to pay yourself right, protecting your capital is a whole lot easier. So let's kind of shift that whole job number one to knowing your targets and not getting greedy about it. Taking a look at this morning's NASDAQ trade. We had our breach, which triggered our long bias or our bullish bias. There's our breach right there. And then subsequently, these retreats where we close the distance to our zones, whether they be Fibonacci zones or VWAP zones, both those fired off. Let me kind of zoom in just a little bit so you guys can see this a little bit better. So there's our breach, and there is our retreat. Take a look at the zone, VWAP, Fibonacci zone from the clearing range, all right? So, and also the major psychological level of 8,300. So we get long the NASDAQ. I think those of you that have been following along on these breach retreats, this setup is probably getting a whole lot clearer. So then we need to pay ourselves. Great, we have an open trade, and at some point it becomes an unrealized winner. And so we know that there's resistance because the clearing range high has told us that there is resistance in this area, right? There's our clearing range high. And that's always, I think, a really good T1, target one, after what we call the retreat entry, which of course was long. We also have a value area high, which is a volume and price important level. And then we have the clearing range high. Again, another price-based important level. Notice that if you didn't either use that level or this level to take profit moving forward, how many opportunities did you get? One, here, right here, that's your clearing range high exit, okay? And let's say you were stubborn. That, well, the market could keep going up. It looks like it's going to be an up day, blah, blah, blah. The market was kind enough to give you one more shot at that value area high. And then what happened? Womp, 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 womp. This is why we do not overstay our welcome. And this is why you need to be so disciplined about that first target. Too many traders get very greedy, too greedy for that first target, and then quite frankly, not greedy enough for their second. We'll keep that for another conversation. But make sure once you get into your trade, you ask yourself, where is it likely the market's going to run into a stack of sellers? I want to pay myself in front of that, move my stop to a break even, and do my number one job. Now notice if you kind of screwed up your number one job, which is pay yourself, okay? Look how much of a difference it made to your risk, right? Now you're in a risk situation. Now you're far below your entry. Now this is a losing trade, right? So I think if you get your targets right, most of it, not all the time, but most of managing the downside gets a whole lot easier. Hope that helps, and I'll see you in the next update.